Good morning, traders. It's 8:01 a.m. Chicago time on Friday. Happy Friday, everybody, on the 9th of June, 2023. This is episode number 2480. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, really looking like a pretty boring day, to be honest with you. The overnight positioning is balanced across the board. There's not much to price in. We have a mixed opening again. Yes, we've been having mixed openings with a push at the open. Yesterday was a pretty strong push from the Nasdaq up, contrary to what was expected. No earnings, no numbers. The biggest piece of news really is the Chinese inflation remaining very, very low, lower than expected, and Canadian employment higher than expected. There's just, there's news occurring for other assets. We do list Bitcoin and Ether here, so we cover crypto within convergent trading, but the big news there is that these lawsuits with involving Binance and Coinbase. I received an email from Binance yesterday saying that if I was to withdraw fiat that's sitting in my account, I need to do so by June 13th. So if you have money or cash sitting at Binance, I don't think I do. I think it's fully in tokens, but if you have cash, you need to get it out because U.S. banks don't want to do business with Binance anymore. Tesla is expected to agree to another EV charging tie-up with GM. It has one with Ford. And Netflix U.S. subscribers jump after password sharing crackdown, a new low-cost ad tier. So that's where we are. We have the Baker Hughes rig count today, nothing really significant. Again, balanced market, 142,000, pretty normal volume, normal-ish volume. On the light side a little bit. Inventory is 56% short, and the range is 18 points, which is actually pretty good. The range for today runs from yesterday's VWAP about yesterday's VWAP was 42.85 or so in the S&P, all the way to the S&P high, and it covers the upper distribution of yesterday's trading. So we managed to get through 4,300 this morning, and we're holding the point of control just below. This is not what was exactly expected, but I'm a day trader. I'm not an analyst, so I'm looking day to day at what's going on. Here's where we are. So that's what we've got for our pre-market summary sheet. Here's where we are in the S&P. The main idea here is that we pushed to the 0575. We went to 0475. Yesterday we went to 4302 and a half right here. And what we're doing is we're forming a bit of a kind of a channel that looks like this. Downward sloping channel. Let me clear my throat. A downward sloping channel, which looks like this, okay? And the idea is we are likely to break through and get through this. The auction expectation is to retest the weak structure, and there's weak structure beneath yesterday's low. Actually, there was weak structure from 42.72 downwards, but that got filled in on Wednesday, and it traded out yesterday, and we kind of formed this new level. So this chart has not changed at all, but I've added this level here, this zone here, because we've kind of shifted that edge down. And we're in this kind of skewed balance. We're still flagging. It's still bullish. We broke to the upside from this long-term balance going back to August of 2022, we broke into the upside. What it looked like to me, given Wednesday's action, is it's very likely to pull back and test the top of that balance zone. Again, that 39 area before the next leg. But yesterday, the Nasdaq started out pretty strong. Again, Nasdaq expected to do the same thing, has run quite a ways, has been showing weakness against the S&P in recent days, and the expectation is it would turn down. But the Nasdaq opened up strong, and we have to look at that as the most recent and most important information. Again, I was in this, if you look at yesterday's video, there are all these comments from this guy that I'm confusing new traders and so on because of my short bias. And the fact is, I don't have a fixed bias. I'm simply responding to what's there. So if we look at where is it? Looks like I got rid of it. If we look at where we were in yesterday's video, I mean, with the information given this sell-off and the point of control at the low end of the range, how could you expect anything but for it to continue lower? It's physics, really. You know, an object in motion remains in motion until something acts on it. That's how momentum works. That's how the trend works. And what it did yesterday is it reversed that trend. So yesterday, as soon as it got, as I talked about in the morning, as soon as it got above 42.84, was it? Yeah, 42.84.83. As soon as it got above there, it was clear. See, this zipper right here from Wednesday evening, it really is defense for the shorts. And if it takes it out, which it did on the second half-hour bar, the second bracket, then that becomes actually potential support. And if you zoom in, let's zoom in here. If you zoom in and look at it, so this is where we are. This is the zipper that's defending the shorts given the context of what happened on Wednesday night. And I'm using this as an example of how to look at things and be dynamic as a trader, because you have to be as a day trader, right? You can sit here and argue that we've been in a swing long, but I don't really care that we're in a swing long. It factors into the context overall, yes, but on an intraday basis, it doesn't really matter because I don't have much else to talk about today. I'm talking about this. So what happens yesterday? Yesterday, you monitor the top of this. I didn't draw it right. The top of this protection area for this zipper, this box, almost like a Darvas box right here. So you're watching this, and the expectation is, you know, we opened right within it, right here. We tested down. We could not take out the low, and then we had the strong push. The next bar pulls back to the RTH mid and breaks through. So now you're looking for at least, you know, one of the classic price action type trades, at least a pullback towards or into. If I can draw this right, let me get this right. It's right here. I'm going to try to draw a straight line. No. You're looking for a pullback to trade from that direction. Why? Because the day before showed that selling was dominant. Definitely selling was dominant on Wednesday, and it shows the point of control is at the low end of the range. That point of control is made up of a lot of volume. This is a lot of volume down here, so I'm just wanting you to understand the auction versus looking at a piece of software and seeing some stuff on the screen that doesn't mean anything to you. Well, it means something because the profile is showing that there's a lot of volume at the point of control and in that area, the value area that's around the point of control. There's a lot of volume there. That volume is 1-to-1 shorts to longs. 1-to-1 shorts to longs. So for every long in futures, there's a short. There is no float in futures. There isn't this, we can't just dilute the number of contracts and issue contracts with no other side on them, right? This is every contract has a buyer, every contract has an opposing seller. And so what that means is a whole bunch of people were sellers here to form this point of control. So as we squeeze higher, we expect acceleration, and that's what you got in this impulse bar here. If you miss the impulse bar, it creates an opportunity again to trade the pullback because it's an impulse. We expect this high to be taken, which took until this bar to be taken. That's another setup. It's another expectation. And what we did yesterday is we resumed the balance that we've had inside of this big composite here, the micro composite. You could see where the point of control is right there, 42.90. So the expectation is for a push to 42.90, which it did quite rapidly. Look at how it built another acceptance zone. See the volume there concurring with a 42.90, and then later on it pushed, and we ended up with a point of control at the upper end of the range. The point of control at the upper end of the range given yesterday, although yesterday was kind of an odd, that pullback was quite odd. The point of control at the upper end of the range tells us the auction may not be complete. And so what that also tells us is we are likely to continue higher to check to make sure that there are, that we might motivate sellers above these consecutive highs of 43.0250, 43.0475, and 43.0575. So what we might be doing today, and we're holding on to 4,300 plus, and unfortunately we're opening at 4,300, which is an important strike, which forces those who are trading the underlying options or whatever to hedge their delta, and so you're likely to get noise there. Not a good area to open at all. Likely a very choppy area to open this morning. But they're not giving the 4,300 up, and so the only thing remaining for them to do if they want to continue to check the top of this bracket is to push through the 43.0575, which is the expectation. And the point of control being at the upper end of the range is the fuel that's likely to make that happen. So yesterday's profile was multi-distribution. In other words, no agreement or consensus on balance. So you could see this is the outline of the profile. And it looks like, what's his name? Bernie from The Simpsons. He's got that Neanderthal eyebrow or forehead. Multi-distribution profile, what that says is we don't have balance. The market's in an active price discovery posture, which the Nasdaq was definitely in, but the Nasdaq really set up a beautiful long yesterday from 14,405 for 14,504, which I talked about in the conversion trading chat. And that's where we are. We are, let's look at the big picture and look at where we are. Yes, we've broken away from balance, but we are not. But momentum has stalled. It is consolidated. It's consolidating. It is picking up energy for the next leg. And if we have a trend down day, then the expectation is that trend down day is likely to continue, and it didn't yesterday. So this is a bit of a Monty Hall setup yesterday. It caught folks who were short the day before. It caught them short and it pushed higher. So you can see here, point of control down here. We are shifting the point of control down. So point of control, point of control, point of control. So even though price action wise on Wednesday, we broke the high, which in the morning that looked like it was a reversal and very likely pushed through the 575, 43.0575. It ended up falling through, and when it ended up falling through, then we expect balance to some selling. Week low, and then yesterday it opened right at the low end of the range, tested that week low, and then started to rotate up. So what we have is even though the price action shows higher low, higher high on Wednesday, We don't buy that because we're looking at the auction, we're looking at the volume or the market profile. Um, we're not looking at price action alone. Price action alone to me is misleading. You need to see where the volume is, and what the volume is saying is it's actually accepting lower and lower prices despite this somewhat of a reversal, a B-shaped reversal on Wednesday. And so coming in yesterday, I discussed how this entire region here presents a weak structure, and the expectation is to push to 4250 and 4240, and that's the basis of that. And if the market shows something different for the day, fine, but this structure remains weak underneath. And so if it does it, which I don't know if it will or will not or when, but if it does it, I know that I need to hold my runners to 50 and 40 at least once that happens. You see? That's why I day trade. I don't analyze. I don't swing trade. I don't do those sorts of things. And that's where we are. We are in a downwards sloping channel, and we're ping-ponging across this channel. We're at the upper end of the range, and the question is, given that it's Friday, is this the day where it squeezes through and it breaks through to, remember, my perfectly, oh, it's not going to happen today, my perfectly written 43.16. Oh my God, I did it again. I did it again. So that becomes our target on top, and then on the bottom, it's 40, 40 being the key figure in here to test. We're in the middle of that. So today is all about sitting back, letting the market decide which side is in control. So I'm watching rotations, I'm watching where it opens, and so on, and then trade from the side where rotations are expanding, trade the pullbacks from that side. Very basic setups for today. The NQ, if you look at the NQ, if you recall, I showed you these bands here. The NQ did beautifully on Wednesday by getting down into this this band at the 43 14,370 area. Yesterday it pushed lower. I added this band here. It pushed lower, but you can tell yesterday there was a very weak test down after the open, and the Nasdaq was very bullish. I noticed that immediately. I pointed that out in the chat room, and I talked about the expectation that this is likely to push into 14,504. We ended up settling at 14,503, and it went right to the band that was already here from way back at 14,525 or so. It went right to it and then pulled back to the middle band at 14,450 and ended up settling at 14,503. So the Nasdaq, big squeeze yesterday, but still it's respecting this structure right here. It's respecting this kind of upper box that was formed earlier this week and last Friday, actually Monday, Tuesday, Wednesday, yeah. So last Friday and this week we have this upper box, and we've kind of respected that. And then this morning what it did is it ended up moving into the upper box because the Nasdaq also finished with its point of control at the upper end of the range. So we have a P-shaped profile. It tells us that we're very likely the auction is very likely incomplete to the upside. The point of control being at the upper end of the range gives us plenty of energy to keep pushing because there are shorts as well as longs that form that. There's people sold, somebody sold to somebody to form that volume, and so that becomes the fuel for the next day. And then the target today would be, and I would wait for you to answer, except it takes like 30 seconds. The target would be this point of control up here, the point of control of this entire region at 14,580 or so. That's the key target. We're very close to it, 60. That's one rotation. but that's what we've got today. I'm expecting the Nasdaq to push up in a gap and hold steady up here today. Anyway, that's all I want to cover. It is Friday, and you want to be careful. Next week, there's a lot going on. We have CPI the day before the Fed decision, two major releases. The Fed is expected with high probability. That's priced into the Fed fund futures. With high probability, the Fed is expected to pause. And if it surprises the market like the RBA did and like Canada did, then we are likely to see some really good trading opportunities next week. If it pauses, it gives the market more confidence to put money to deploy cash, which there's a lot of cash on the sidelines and chasing yield. That money is likely to be deployed into the market, so we're likely to break out to the upside in the continuation trade without repairing these weak structures below. So there's not much, meaning there's not much impetus today to make a commitment from the highest time frame, from the institutional, the people who drive the trend. Don't have very much to do right now with so much riding on Tuesday and Wednesday of next week. Okay, good luck. Hopefully you gained a few things. You're starting to see how all the jigsaw pieces fit together, and you can then modify this to make it your plan. Good luck, and I'll catch you Monday morning. Take care.